Okay, we have another IPO. There's one more IPO issue that's coming through today. India Shelter's 1200 crore rupee IPO is opening. So let's get the management in. Of this 1200 crore fresh issue, 800 crores is a fresh issue and 400 crores is an offer for sale. The company has raised 360 crores from anchor investors. Rupinder Singh, the MD and CEO, and Ashish Gupta, the Chief Financial Officer at India Shelter Finance Corporation, join us now to talk about that. Gentlemen, morning to both of you. Mr. Singh, let me start with you first. If you can just, for the benefit of our viewers, people who are perhaps looking towards your IPO, tell us a little more about your business. What kind of growth are you looking at? What kind of asset quality are you targeting over the next couple of years? I think you're on mute, Rupinder.
Yeah, very good morning.
Go ahead.
And thank you for calling me on my channel. So we got the anchor book yesterday. So good names like Goldman Sachs, ICICI, Nippon, Kotak, Axis, TD International, all supported us in this piece. Now the issue opens today, and we are quite positive. And thanks to all kind of support from entire ecosystem. So if we talk about the business per se, the India Shelter Finance Corporation started way back in 2010. We are into the same operation from last 13 years. It's a housing finance company, purely housing finance company with a focus on affordable side. We largely capture tier 2, tier 3 markets for the affordable, and our focus remains on self-employed. So category of customer with the income is between 25,000 to approximately 55, 60,000. And the average ticket size for loan remains around 10 lakh rupees. So this is the focus area. And when we started, those were the days for home loans, which are more into prime segment, towards more on the salaried side and the creamy layer of society. At that time, we played this punt, and I think giving good fruits till now. It's working well for us.
Can you just tell us a little more about your customer profile? What is the EMI to income ratio that you have on your customer base? And what is your game plan? I mean, are you looking to stick to this customer profile, or are you looking for any kind of change, diversification, etc.?
So this customer profile, majorly you find the markets we operate into that. If you see the EMI to income ratio, normally it is around 50 to 55% where we offer these loans. In fact, one more important piece that we keep in mind, apart from this ratio, is the loan to value. That is again the collateral what the property has been offered by the customer. So we have 50 to 53% of loan to value there altogether. And this is helps in terms of controlling the risk also, because a lot of equity from customer side also comes in to play the role out here.
All right. Good morning, Mr. Singh, as well as Mr. Gupta. And thanks so much for joining in on the show. Well, with this fundraise, will you all be pushing for a rating upgrade? Point number one. And how does it change your CRAR?
So our business is all about three important pieces. One is money, which is a capital, a raw material for us because of finance business. Secondly, the people who drive the business, that's a team around there altogether. And we also blended a technology around there. So today, the net worth, as we see, the September number is around 1,375 CR. With this infusion of 800 additional number coming around, we will cross the level of 2,000 crore plus capital. And that's an important benchmark to have if we have to look for the next level of growth. Obviously, when we had to go to banks for next level of borrowing, we can request rating agency for upgradation also, as we stand today with A+. So this is an opportunity lies as you infuse capital. Housing finance company normally have a very strong CRA, and just because risk weightage is quite strong, thanks to the regulator in terms focus around that side, consider to be a less risky profile around that side. So more focus is always on the leverage side. So if we see the leverage particularly, it was 3.5x when we see the September number. With this infusion of fund, it will definitely go down. But the objective is another 12 to 18 months, we should come back. So that is a thought.
Mr. Singh, good morning. Mr. Gupta, good morning. Mr. Singh, just what you said, self-employed, the affordable side, right? That's the target segment for you.
Yes, absolutely. And that also will be a
Right. We had the management of PNB Housing yesterday with us, and they're also focusing on the affordable side. And we were discussing the supply there, and he was telling us that most of the affordable housing is, I mean, only 20% is new construction coming up. The rest of it is resales and, people constructing their own houses, et cetera, et cetera. Would you concur with that? And does that pose any risks higher than if, say, for example, it was more organized in that sense?
So India is a vast geography we see. So today we are operating in 15 states and more than 200 branches. So deeper you go, the aspiration of building houses coming up thanks to the good schemes like Pradhan Mantri Awas Yojana and support from government in that side. So a lot of awareness is now which is coming up, which was not there say 10, 12 years back itself. So we are targeting deep into markets. The segment of customer where the ticket size itself is around 9-10 lakh rupees. It's a very low when we compare to the large institution banks who try to cater the requirements measured in the top 20-25 cities. So if you go to smaller places, we are the locations which most of the people may not be aware of today, but still they have a strong population. The growth is coming around at least. And if we see our record of last 4-5 years, there's a consistency in growth. The CAGR of 40% we are constantly giving around. And the way we are seeing the traction in marketing in recent time, we find that there's a lot of opportunity on that side.
What proportion of people who borrow from you, Mr. Singh, borrow it to build their own houses?
Almost 25 to 30% are for the self-construction. Then there are remaining 20-25% who will the sale purchase. Then there are around 40% who will go for loan against property also because they're into mortgage the same kind of a scenario. So these are the three aspects.
Okay, Ashish Gupta, who's the Chief Financial Officer, is also sitting by with us. Ashish, Rupinder briefly mentioned loan against property, so I want to talk a little bit about that. Your LAP book is currently at 40%. Do you think this is a high risk for your business? I mean, because it may have a high amount of unsecured book as well, or do you consider this as an opportunity?
So we have, we have 40% LAP book, but the kind of discipline we have maintained, in our underwriting processes is pretty much similar as we have done in case of housing loans. So, if you look at our LTVs of LAP is around 45% average, vis-a-vis home loan around 55%. So it's a less riskier product as compared to home loan, though there is a difference in the end use, where in case of housing, the money goes for, for the purchase or for the construction of houses. But in case of LAP, the money goes for the business. So given the, our conservative underwriting processes, wherein we always keep self-occupied property of the borrower as collateral, we think that it is as good as home loan.
Okay. So you're not facing any issues with respect to repayments, etc., from your LAP book, right, at the moment?
If you see our historical trend of delinquency in the LAP book, it is pretty much similar as the home loan. So our delinquency, our GNPA number is at around 1% total. And in case of home loan and LAP, it is pretty much similar.
All right, final question then before we let you go. What about geographic spread across the country? How do you see that changing, say, in the next 2 to 3 years?
Actually, the 15 states which you cover, that covers almost 90 to 94% of the mortgage market of country. So there is a lot of scope. We are just 200 branches in 15 states. We are not even have covered the entire districts around that side. So going forward, we'll see a lot of penetration in these markets in terms of opening new branches, tier 2, tier 3 and beyond that. Because as the confidence kept building and our also say if the geography keeps increasing in form of distribution and strengths. So you will see a lot of traction in terms of opening new branches. So we expect 35, 40 branches get added every year if we see the next few years going forward. In these particular 15 states, we're still operating.
Thanks so much, gentlemen, for joining in and giving us a sense in terms of how you see things shaping up. We're looking forward to the listing, and then we'll have a deeper chat. We'll get some, guidance as well in terms of the way ahead.